Talk to me honestly. I'm here. I'm here. Talk to me. I'm here.
What's up, everybody? Good morning. Pretty decent open today. Market rational again, no issues. We just rolled into a new VIX month. It should be a little bit less chaotic. Monthly expiration on Friday as well, so keep in mind. Always cause some mechanics on Thursday and Friday of the week. Officially signed the agreements. Futures date is a go. Setting it up now. You guys have been waiting very patiently for me to build that entire thing. What we're doing is huge. That. So that is official. Not only do we have futures data, endless amounts of futures FCMs to trade from, we also are partnering with the broker for brokerage services as well. All of it, one package. Not one package, but for you guys. The Pro package, you'll have the access for that. Will treasuries be included? The exchanges we're starting off with.
Talk to me honestly.
We got CME, CBOE, COMEX, NYMEX, and the CFE of those five. If we find out that we need more futures exchanges or global exchanges, we'll go as needed basis. So treasuries are what? CBOT, right? We can add any exchange that's needed. We're just each one of them costs. So we just took like an average of what we thought most people would want to start with, and essentially what we needed to get started with to create our tools. Right, to automate all of our stuff. Okay, rational. This is the pre-market check. If you guys go to the Discord, there's the pre-market check information, how to do that. What I do every single morning is the same thing. No issues on the VIX as well. No risk interval. Nothing close. We're still hitting that 4140. That's been the pivot for weeks. Just be careful. We're going to look for a positive DD to take us to upper band again if we can get that, or the DD float if we do fall and it's positive, or vice versa if we start getting short signals. Remember, we are going to be above monthly hedge pressure, so it's going to be interaction with monthly today. We're going to keep an eye on the resiliences, especially the yellow one. When you get to the last 2 days of monthly expiration, you get very sensitive to MHP and it starts to close in on the price. Our treasury futures are on CBOT, right? CBOT. I believe so. And it's a nominal cost to add a few more. So we can probably, it's a phone call to turn some of them on. Let me say nominal, relative. Yeah, so that's not in the launch product, but you'll have CFE for VIX, you'll have NYMEX, COMEX, CBOE, and CME. Yeah. get ready to get going. I'm going to estimate where these should be. We have some gap fills up here. Remember, these are from yesterday. We will be gapping up as well. Make sure we mark this. This is yesterday's close on the SPY. I mean, sorry, yesterday's open on the SPY. I was right. Hold on. Don't listen to me. What am I doing? I need to wake up. Market's not even open yet. Okay, one more minute. Start over. If enough people need it, we can look into it, like basically right when like during the project. Well, I just picked those 5, and then so what we'll do is we'll see if people really, if 10 or more people are going to use it, then makes a lot of sense to get it. I mean, that's a very common, thing to have, so. My bad. Okay. All right. Welcome to the stream, everybody. Hit that like button while you can. Oh, let me make sure All right, let's go. Oh, I was wondering where they all were. I had all my toggles turned up. Okay. We are opening below hedge pressure BSU. Okay, BSU is a very, very interesting setup. Bottom of the bull zone, as long as DD supports, back to opens. Open. Sorry, open. Start over. Hedge pressure, bull zone, middle is a pivot, and that is a really, really, really tight range right here. So basically, open. Right here, if we trade down the bull zone and DD supports bull zone, it does go back to middle. Remember, we have to get a hedge pressure break for me to want to take a big long right here again. Nasdaq is pushing higher, so let's watch that one really quick. So it's the same, basically the same setup as yesterday. So we have to be very careful, monitoring what resilience is doing. There, you have a divergence case. Looks like we'll see. Getting close. QQQ. So I'll take a hedge pressure break long, nothing in between. QQQ is opening bull long up, so QQQs have a support at 328, maintaining positive resilience as we will likely support a half gap. So it looks like we're pushing higher, and I think QQQ supports that. All whites are green. Resilience is good. DD is good. Yeah, everything's pretty good. I don't dislike what I see. Let's watch Russell. Looks like the worst of the 3. It's a BLD on the opening side here. Russell pulling back. Let me get a little quick picture here. I'll tell you what I'm excited about. I'm excited about like all the prospects of having futures data with all the rest of the automation of our tools, futures trading, as well as futures broker. I mean, that's a big part of it too. You're not just like dumping your money in some random account as a trader, and they're like faxing you your broker statements. It's like a broker, somebody get on the phone with, somebody that's there, somebody help you get, guide you, things like that. That's very important, and that again, that's going to be a bonus for the brokerage services. The Rocket Scooters website, you'll have access to all those tools. So it's not just like we really put our thought into it. Got to put a lot of effort into making sure y'all have the best experience. Okay, I'm gonna watch interactions right here at the bottom of the bull zone. Let's look at VXY today. Should we stay on top of the news? Every morning the pre-market style is exactly the same. Make sure you just monitor a news aggregator. You have nothing going on in the overnight session. Building permits, slightly on par, slightly below, but close. Housing starts again at par. This is Wednesday, so we have the EIA report right at 10:30 Eastern. Cisco, we target before market open. Target came in as a slight beat. Tomorrow's a pretty big one. Alibaba, Walmart, Ross, Merck. It's pretty decent. And then earnings are going to start to pretty much taper off, right? So we're almost done with that. Major earnings are certainly pretty much done. This is the last week of them. What was that at 9:33? What was what? So UVXY, bear short up again. You're in an illiquidity pocket in UVXY. So be careful in rapid VIX interactions. Okay, let's see if I like this. Keep an eye on resilience. All right, so let's go through and draw some setups here. I'm gonna make sure I get my pencil, handy dandy pencil. Everybody, smash that like button. You guys are here. I know y'all come in here, wake up in the mornings, just like I do. Every time you like the stream, a Trado YOLO's GameStop. So maybe that's a saying we should say. Let's change this a little bit. Okay. Right here. Obviously support at bull zone on DD. We have res. We have, let's just draw them here. Res greater than 0 support there. Res less than 0 there. It's the same analysis every day, which is kind of a very cool, easy to learn process. We have another thing up here. We have a liquidity pocket, right? Liquidity pocket. When you go from wall to middle, DD ties or breaks the tie like so. So there's a scalp in there. So if you put them together, there's a scalp here and a scalp here, and a double down right there with a stop there. 1, 2. Actually, see, the thing is that right here, there's not, you're limited upside. You got like 5 or 10 points, not a lot. So if I do anything here, it's got to be very small so I can dive in at those. I'd rather take the better bets here. Right. But so if I were to have like 10 contracts, an example, like the R&R is really, really bad. So I would put like, maybe 2 on bull zone support, just a little bit, but I know I'd have to come in with the other, like 3 more and 5 more there. So I'd long and then I'd really long somewhere in there, as long as res is greater than 0, right? And so that's how I look at this. Make sure there's nothing bad, right? All lights are green. That's good. These are good. Anything above 0 is bullish when lights are rational. So Yeah, shorting against hedge pressure is always a decent idea too if you are a bear. So, not saying that you should short. Obviously, not trading advice. In the BSU, there is no red arrow typically because these setups are actually very bullish. So while there is always a rejection point from a hedge pressure, it's not the most common one. Just like the bear long down is so bearish. The momentum is high. Usually these are called breakout trades. The momentum is usually high. That I don't usually try to get in the way. They break more often than they don't. But it doesn't mean there's not a scalp if it makes sense. So shorting from here to here, always a potential. Like from here to here, always a potential trade. So with DD being, greater than half, the short that I would take if I were taking us from here just to there, and then I don't bet that we lose that. If that makes any sense at all. So if you were going to hold on to a runner, if like resilience goes negative like right now, then obviously it's a pretty big, decent short down to the bottom. But I also don't bet that we leave the bull zone and exit to the bear zone. Remember, that's a really small probability. So if I were shorting, I would call most of my position right there. So I haven't touched it yet. Nothing yet. Give it a minute or two to kind of stabilize. Like I said, I would like to pile in here as long as resilience stays positive. The fact that it's negative starting here, once we get there, it's probably going to be more negative. So the chances are the short seems a little stronger today as well. So just kind of waiting for things to play out. The R&R, the upside is really small, so I'm not really excited to take anything too big there. Let's double check some of the other things. So we have oil coming up today. So for me, at the open especially, normally it'll stabilize like within a minute or two, after open. And so with it shifting negative, like it doesn't scare me out of my trade immediately. I just know if I were long, then I have to make sure I do know that I'm probably going to be at a loss. So I would either trim once it starts pushing lower. Like I always personally, when it's hugging zero, especially when rational like this, I'm very on alert right now if I were long. If it were irrational, I give it that 10 points of fluctuation just to kind of make sure I know that it is really giving me a strong signal, not just hanging out. But I do know if I were to long here, I wouldn't be considering doubling down anymore because of this setup. I would be ready to stop out on this if it didn't work. That makes sense. So looks like we're pulling back on both of them today. It's pretty. Getting a lot of unusual selling pressure in the last 3 or 4 days. There's no event today, I think, that can also move the market higher. So this is going to be a mechanical moving. Yeah, Russell's still looking the same as the S&P. Nasdaq still holding up. So we're getting a little bit more sector rotating. But they're starting to go away. As you see, the difference between the two is not that bad. Tech is the only thing hanging in there. Curious, somebody said Apple running the monthly hedge pressure. Some of the shining darlings here today. What Nvidia's doing? Okay, BLD. Okay. ZD deteriorating? Not really. It's still kind of hanging in there. So there could be a decent opportunity down here up to there. This might be another internal day to yesterday's move. So I'm still aiming at the bull zone with the DD being bullish. So I'm still looking for moves to there. There is no entry point in the middle right here, so nothing yet. Like, I'm not touching it yet. Days like this end up looking like this. If you get a break here, this is always a good run to upper band. If you do fall, there's going to be a couple things. You're going to have the float off the bottom. So if you're looking for exit targets, res less than 0, clearly. Goes to there. You open the bull side, majority of the time you end up on the bull side, if you guys remember that. So any downside move could crawl its way back up to the top. Very limited. There is no hedge pressure break across the board. QQQ is trying to. So be very careful here. It could be an irrational signal. Man, I love these arrows. This is wonderful. Yeah, so far right now, all signs are pointing to that now, right? Personally, the trades I like to take in this account are the good long breaks if I get them. So not gonna play any scalp. This one. Tesla MHP break again. That happened 2 days ago, or on Friday. Remember, big nasty fall. But Tesla breaking to the upside is a pretty decent thing to see. Okay. I want to like when I finally finished the overall schematic for how our futures data was going to work and be routed and how all this stuff was. I drew this. I spent most of the day yesterday making this very nice looking schematic. Well, I drew it up myself, and even Nicole looked at it. She goes, "Wow, what is that?" I was like, "Oh, that's like months of work. That's how our servers are going to be working and how futures are going to be, how we're going to be trading and all that stuff." And she's like, "That's actually pretty impressive." She's like, "Oh, that's very complicated." I was like, "Yeah, that's why there's not a lot of." So it's like why there's not a lot of people that can just start up a platform and start trading. There's a lot of moving parts. I just have to say that. That's why it's taking so long. But it's not just like we call a company and go like, "Hey, we want futures data." Like, "Oh, here you go. Have at it. You're good. Turn it on tomorrow." You got to piece together so many components. So go all the way from the platform to the exchange and all the way back. Data feeds come in, orders going out, confirmations coming back, entitling users, all that stuff. It's big. So she saw the schematic and was just like, "Dang." He's like, he's pretty smart. Yeah, I'm like, brush my shoulders. Like, yeah, I mean, you know. But I'm excited. It's a big step for us, you know, to have the rest of our tools automated. I would love to have automated DD bands. QQQ hedge break, I love it. I have one idea that if I click these should link me back. Little idea there. I always come up with these little neat ideas to push my platform functionality to have one less click each time. Did at least get a foot massage? No, I didn't get no massage. Nothing. I like the idea that let me do this really quick. Okay, let me teach you guys something secret. If you ever want to make a trading platform, this is the best way to do it. It's the best app in the world. We call it Microsoft Paint. I love sharing my ideas with you guys. So here's an idea. Here's a beautiful idea. It's the easiest way to do it. If you guys ever have mock-ups or things that you want to do, engineers love mock-ups. Just draw me something and we'll go make it for you. So you can say like, I want this to be a 2-part thing. 2 fields. I'll be like, okay, A, ticker that's clickable. Right, text field. It's clickable. That enter. So essentially, indicator can have multiple outputs, right? A roll. C is the graphical. So, like, essentially what I'm saying is, like, if you were to go create a role in the server, there's 3 fields here. You can say I want my output to have one of 3 fields if it's interacting with alerts. This thing is clickable, this thing is static, this thing is an arrow. So I could say I write an indicator. I want an arrow to point up or down under these conditions. I want the words hedge break to appear there, and I want this ticker there. So if I click on SPY, like if I wrote an indicator and I called it Apple something something, if I were to click on the first half of this, it would load it up in the chart. That's all I'm saying. But also making it customizable. What the hell is going on in the market today? Let's go. There's that fall, right? Lovely. All right. Let's take a look. What's going on? DD not moving. Bear side run. Thank God I didn't touch this. I like this. Let's look at her resistances here. So that resilience tells all, right? When all signs are good, resilience pretty much tells all. We do have some support down here. QQQ sign. That's very rapid. Okay. I guess I forgot to put a D on there as well. C. D. So the idea is that you can actually program this entire line like as a string. I want my output to be light bulb, ticker, text, arrow. And you'll be able to program an interface that looks like that. Right. User logic output can be designed to be a string of the so essentially, like, it gives flexibility to the user. There you go. This is what we call Microsoft Paint mockup. Super quick. I always do this so I don't forget a good idea. But it's not just like me saying, hey, by the way, can you... Oops. It's just like, it's not just me saying like, you know, hey, can we make SPY clickable? It's that I'm thinking future planning, right? Our vendors that are going to program on here will be able to have, so anybody that develops on the Rocket Scooter platform will have that flexibility. Okay, Russell at IWM, hedge pressure support. Interesting to see right here. Okay, let's redraw everything. Just take a look. Make sure, and VIX is an illiquidity pocket. We always talk about this, is that you're going to have a potential VVIX movement, as the VIX can move very rapidly inside of here. Okay. Be careful today. Hedge break on Qs. Now, Qs brought down IWM. Qs are the only things that were looking good at the start of the day. Hold on one second. Sorry guys, 1 second. I'm in the middle of a bunch of stuff here. The Judas swing happens about daily. You can YouTube it. What is that? This is just an interesting. So checking out SPY really quick. Sorry, I had a quick phone call. You should make an extra thing. We can have like a watch list. Yeah, watch list is something coming forward too. It just comes down to the capabilities of what we can create in the time frame we do have before we have to pivot to futures. Watch list is TradingView has a native watch list that we can probably do. Let me ask him really quick. Without any customization, like okay. If we weren't going to do anything additional to it, I could see that that's something we could probably just turn on without any modification, just match the style of the platform. The widget is there, and so we just never initiated the project for that because we wanted to create, like I said, everything that we make ties into everything else in a very key way for like the future stuff we're building. Like you create a rule, the rule will control the display, control the alerts. It'll be part of the scanner, part of the charts. But having a watch list would be like not needed to do all of that, I guess. So but everything we make, we always talk about like what we're going to tie in other things. And the watch list, all it's going to do is manipulate the input to the ticker for the chart. So I wouldn't think it'd be that big of a deal if we just threw it in as is. Okay, let's analyze what we have right now. We have irrational mode. We need resilience to be around 10 or less than -10 to give that signal. Being negative here, it does show that we are destined to pull back further. Very likely. Now, but just keep in mind though, DD outranks resilience. So you have signals pointing all over the place. The market's going to be volatile and crazy. So right now, in the liquidity map sense, we want to at least interact with the bull zone. So if there is a long anybody does take, right, I always think of it like this. Okay, the bull zone failed. At least with DD being 0.7, it might want to interact with the bull zone before it continues to come down. So today's move is it looks like it's pretty solid. As long as res is less than 0 and it's less than -10 while irrational, this is very likely. It's not going to fall there because this is clearly going to keep some upward momentum. But this is very possible today now. You see how that works? Hey, Colin, I sent you a message. So the futures, people are saying, okay, so where's the futures stuff, right? So the trick with liquidity map is we use the equities. And I went ahead and detailed that in the courses. We use the equities options information to create the pivots for futures. I know I'm looking at SPY, but I'm trading only futures. Like I'm not trading SPY. So keep in mind that the secret sauce or the trick is equities options. So people are like, I got into Rocket Scooter and it looks like y'all don't have futures data. I thought y'all had futures data. It's a future. I'm a futures trader. And I'm like, no. I'm like, it was designed by futures traders actually. The idea that we'll have futures data to overlay the information onto is great. It's still calculated with SPY. You'll have some of your information like DD bands and risk intervals calculated from futures, but you have some things in SPY. So the idea is you're going to look at the index, right? The index is its own thing. And the index has multiple products and angles you can look at it for risk. You can look at the futures, risk intervals, and other things to find information about the index from the futures angle. You can use liquidity maps and resilience to find information about the index from the equities angle. They're all tied together. If one moves, the other moves. So you have to look at the whole entire package. So I think people are used to having a chart, right? And they go, okay, I trade futures. Where's your futures data? It's not just indicators from futures data, like technical indicators. The idea is that you want to trade the index. You got to look at it from all angles. And that's what we do. The futures stuff just isn't manually programmed on my chart. I say automatically programmed on my chart. Not yet. We're working on that now. What you'll see right now is the futures style and things that we do. I manually draw most of them. Red lines, yellow lines, green lines, we call them as nicknames. But you have all the stuff, the DD bands, the risk interval. That is all the future style analysis. So while Rocket Scooter doesn't have them automated in the platform, you still have, remember there's this, oh, that's that old. That's old. We still give you like ways to manually do this yourself or the calculations, or we even created tools for some of the other platforms like Thinkorswim or TradingView. Until we get them automated. So like if you were to trade, the idea is that if you have SPY, you're gonna have all kind of information on this chart. You're gonna have your DD bands, you're gonna have red line, yellow line, you have all kind of stuff. You'll be able to toggle them on and off in the display. But the future stuff is still manual because we don't have futures data, but doesn't mean you can't do it. Like we still give you the equations, we give you the technique, or we give you the indicator to add to another platform before we add it to ours because we don't have the data yet for it. The current futures price for the SPY, so that's a question. Let me rephrase your own question, answer it. What is the futures price for the S&P front month, like the S&P futures contract? It is currently 41.32, as you see. Some change. SPY doesn't have a future. The SPX has futures. Andrew said, kind of like using that scanner. I know if I'm looking at stocks breaking down HP, it shows them. Yeah. I like to do, this is one of my setups. Let me load my window layout. Oh, that's way too many. Oh, because I was demonstrating. Oops. Let me, I was demonstrating that actual in the class yesterday. I was like, why do I have so many windows? Okay, let me. Okay. So I have like, I maintain a scanner on another one of my screens, kind of like in the background. I reference it every once in a while. So what I look for, and let me just maximize it, is I have the mean reversions, the ones with BR and the ones with B. So I try to look at the total ticker count to try to see like the number of stocks moving from one zone to the next, just to kind of get a feel for the flow. And so this is another cool way to see it. So this is the number of tickers, right? If you think of the DD ratio. As tickers are bullish, I can sort it by market caps. I can see which ones are heavily bullish today. We see clearly Tesla, AMD, Amazon, Apple, really good. Bearish, you have these right here. And then the ones that are in the middle. So the idea is that the middle, if the middle goes down, then one of those two go up. If the bull goes down, it goes to the middle. If the bear goes up, I'm sorry, if the bear goes down, it goes to the middle. So I'm watching stocks migrate from one to the other. I just keep that on that screen just accessible in case I want to just watch it. Like if the market's all tied, I can go in there and see which stocks are the ones moving from place to place that I should be kind of paying attention to. So some of your questions, yeah, so it would be strange to go half gap with that resilience. Well, yeah, and so here's the thing, right? Last 3 days, the market's behaved completely breaking all kind of structure and acting weird. There's something brewing right now. It's hard to pinpoint. We've seen these really large, you know, nuke candles like 3 or 4 days in a row. We've seen almost all of our rules get challenged when they're super smooth all the time, right? We're starting to understand more about the complexities of this bear market. Now, let's think about the situation that we're in. We are in the first bear market that we've had in a long time, if you don't count COVID. Number two, this is the first time we've seen quantitative tightening in my lifetime as a trader. So that's hard to understand, and that's hard for anyone to understand, especially the most professional folks in Wall Street, what the effect is. We're also in a weird recession that was induced by a couple of things, but mostly inflation led from the effects of COVID. So this is a really weird world we live in. And after this 2-year sell-off that we've seen, well, actually a 1.5 year sell-off we've seen, where we are now is a consolidation where in the middle of the recession, as things are getting worse on paper, people are forcing their money into the stock market as a safe haven from inflation. The weird thing is, everyone can say if things are to continue the way they are, in a year or two, we will be trading lower. This market's not going to recover. The positional data, however, shows that this market does not want to sell off. There are people that are stuck. Shorts are stuck, and the market makers aren't rewarding them by dropping the market right now during this time. We've also consolidated to the middle of a very key range that we've been sitting at, which basically bottomed the market last year. So we're consolidating. There's no good news coming out, but the shorts are getting squeezed. So it's like you're not getting good news and short squeeze at the same time to propagate a rally where everybody's buying. You're not getting the longs dump their money back to cash because a flat market is much, much, much better than 4.5–5% loss of your money due to inflation. So the bulls are holding steady, buying a little more off of every dip, just parking their money. They're not buying something because they're fear of missing out of a rally. Do y'all understand that? The reason there are buyers here is parking their money. It's like, imagine that the stock market lost 2% a year and you still chose to put your money there because your cash lost 10. Do y'all all follow that? Less of a loss is a better trade. If everything's losing, you're going to pick the least losing category, right? That's where we are. So the interesting mechanic is that we are running up to we're in a very bullish overall feel. Like DD has been bullish. Only one day did it creep below 50 for just a tiny bit, and that was a couple days ago. Remember that? DD crept lower. It has maintained bullishness all year. There hasn't been any day I can remember that it went below that, maybe once. So it's showing the nature of the bull market. People are long, and the calls that are in the money are also shorts with calls that are getting squeezed, forcing call sellers to continue to buy. So essentially, it's just bleeding out all the shorts until they get out, and then the market's going to drop. So again, this consolidation is going to push higher and then sell off. It's going to sell off from a breakout high. It's not going to sell off from this consolidation. I've seen people throw technical analysis at this for months and fail. I've seen streamers stream for days and quit. I've seen people just not show that they understand what's going on, because it's okay. Nobody really does. This is the weirdest market I've ever seen, but it's not without explanation. I've seen people talk about the daily consolidation and calling it a diamond top. It's a diamond top. And I'm like, no, it's going up. 100% going up. There's no way it can't go up. There's nothing keeping it from going up. Shorts getting squeezed little by little by little by little. All positional data shows bullishness. It does not. Again, that's where like charts and technical analysis just don't do anything on their own. It's like, oh, the shape of this is a diamond top. And I'm sure if you do that in a textbook, will say, yep, it's coming down. Maybe so. Maybe not. Like, there's your diamond top, and oh, it went up, then it came down. Like, you can't zoom out far enough that you ignore what would blow you up on the way down. Even if that were to happen, the breakout, all data is pointing higher before lower. I don't know a good trader on the planet who disagrees with that right now. Everyone I know that trades is talking about how bullish they are. Even people that I know down on the floor. I was on a space yesterday, and Peter Tuchman came up, and Peter's on the floor. He's like, this just feels bullish. It's so weird. It just feels bullish, right? And it's like, well, it does, because there are genuine buyers. We have thousands of ways to show you that. We're not looking at the shape or the brightest neon color I can squeeze onto a chart to poison your retina. Here's how it works. Monthly map. I will show you where people are positioned. Why does it feel bullish? Because there are bulls, literal bulls in the market. Debt ceiling out. We have that coming out too. That's a big thing. As you see, the market is liquid. So everything in the middle of it. I wish I can turn off all my manual drawings. Oh, let me let him know really quick too. Okay. So, in between bull and bear zones, this is what's called a liquidity pocket, right? So inside of here, the markets are very liquid all throughout here. Liquids mean buyers and sellers are going to be able to find each other very easily, as well as buyers and sellers not bearish and not bullish. So all through here over the next couple of weeks, the market is still not bullish and not bearish. You may say, okay, looks like whatever matches drew on the screen is going down. And again, this is where technical analysis kind of ruins your brain. What was that? Oh, that sounds like Thinkorswim. Maybe a news alert or something. I don't have any alarms set in Thinkorswim. Just because it's down doesn't mean markets are bearish or going down. What this means is that the area where markets are liquid is going down, which means if price were to stay flat, you're now illiquid when you're outside of the range. So illiquid is when you're one-sided market. Bearish is illiquid, bullish is illiquid. Liquid is neither bearish nor bullish. Like you're in harmony, right? So price were to stay flat, you're further into illiquid bull territory as the months go on. So the way that you read a liquidity, a monthly map is that if price are to stay the same, this price is deeper in bull territory as the months go by. So the way that this is read, does everybody see this? If 4x is down on Thinkorswim, is that what that alarm was? Oh. Does everybody see right here that this is showing that if we hold this quote unquote consolidation for many more weeks, it becomes more bullish at this price as people are in calls as low as 400, 395, 392, 388, 384. Do y'all see that? This is an understanding of monthly maps. The fact that it slopes down is bearish. If monthly maps sloped up, sloping down is actually bullish and sloping up is bearish. It means you're all still better. Do we all understand that? So the idea is that this is all bullish calls, right? And you're like, oh shit, it's gonna fall. What it's telling me is that if price is flat, it's very much every week that goes by, 410 becomes more and more and more and more bullish. The distance between the bottom and the price is how much more bullish it is. And the same thing it goes. If you were to fall to here today, it's bearish, 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 no longer bearish. Bullish. So if the market were to drop to here a month out, that would still be bullish. So the neat thing about monthly map is it's adding time to the equation, right? So I'm talking to my developers here really quick. Everybody's buzzing about futures. I was up till 2 in the morning. Okay. Oh, I gotta leave in an hour. Shit. I'm gonna take Nicole to the doctor. And run some errands after I drop her off. Is Res busted? I don't think it's busted. The market is just behaving weirdly because of random shifting of positions, very large shifting of positions. You're seeing that. In monthly expiration week, we tend to have, sometimes you'll just have a lot of spontaneous volatility on the Tuesday that before VIX expires for the month, and then that Thursday and Friday. It tends to be a very volatile or weird 3 days a lot of the time. So again, as you see, the bull side is becoming stronger as we move lower. You see that? There's even lower bull support. People are willing to be long lower, or the calls are becoming stronger. The bear side is just deteriorating over the next 3 weeks. Like when we look at monthly map like this, when Ash and I see it, and again, the monthly map has been like this all year, which has propagated that bull side. And again, this is the sharpest decline I've seen in the monthly map, and it's even sharper than it was last week. Imagine a week from now when all of these calls are in the money, and 2 weeks from now when all of these calls are in the money. Imagine you're pulling bulls into the market or squeezing shorts out, which is typically what that is. Shorts with calls, right? So this right here is the same thing we had at each consolidation phase on the way up. Was the bear side is getting lower, the bull side is going lower. We consolidated, pushed higher, consolidated, pushed higher, consolidated, pushed higher. This is still the same mechanic, and the bear side starts to strengthen and the bull side starts to weaken in August, which is why I keep saying next quarter is going to be complete shit on market. Bye bulls, hello bears. Something inflects right here. It's bullish, slow bullish push, and then towards August, September, October, you have an inflection point. We can see that months in advance from the positioning. You'll see that. That's what makes rocket scooters so cool. Imagine your technical indicators trying to guess what's happening in the next 5 minutes because of some kind of crossover. We're looking at October right now in one spot. So do you see how the market kind of gets very strange right in here and pivots and turns directions? So bullish leading up into rate hikes, and then possibly some more hikes, maybe, right? Rocket scooters helping you build a new house. We're the new Habitat for Humanity, baby. If I'm expecting price to go down. So expecting, right? Let's talk about it. We try to operate not as an expecting. It's an if-then sort of scenario. If the price falls to here and the map stays the same, then 2 days later, that's still bullish. So it's like I would react. Like if the market falls to here and I wanted to buy some calls on the dip, well, I'd want to aim my expiration at least to there or greater when it is bullish. Are you following? Example, market tanks on like a 2-day sell-off and I go, oh shit, I want to buy that dip. Well, if I want to buy calls where? Well, I'm not going to buy calls that expire here. I'm going to at least aim for here or later in time, right? So it's like when you react, if you want to buy puts right now, you essentially are limiting at the bull zone as low as it's going to go as long as DD is positive. So like if I were to buy puts for 395, well, they're not likely to go at least at the money here. And then of course they barely go at the money. I need to make sure that the strike makes a lot of sense, but then I also am shorting in a bull zone. So appropriately so, and the way that Ashton teaches this is Ashton is again, we created monthly maps and we're still figuring out cool ways to do it. If I were trading right now in like a zone like this, I would be selling puts all down in that bear zone with DD being bullish. I mean, it's a very easy setup to see, right? In some kind of structure, not just selling puts, but selling puts as part of a structured options trade, as part of a leg, right? Yeah, if I want some good premium, I know it's really hard to enter in positions that low, but like my sell side of my puts are in here, and then I can buy deeper out of the money puts, like selling credit spreads or debit spreads, etc. Right? Oh, monthly map right here. So monthly map is a really cool way to see the positional changes over the course of the month. But again, it's not just what makes our stuff different, and you'll notice if you put our stuff next to anybody else that tries to do something similar, looking at options, the one thing they don't do, and I want y'all to back me up, they don't show a clean split between bulls and bears like we do they? Their shit is all over the place. It's like you're gonna look at like a Greek heat map of open interest. It's like, oh, there's some hot spot, there's some hot spot, there's some hot spot, hot spot, hot spot. The fact that our algorithm has a clean split makes us unique in the space. Nobody's figured out how to do this, to find that balance point in the market. Not yet. And I don't think anybody is even anywhere close. I look it up, the people are like, oh yeah, these other guys, they do options. So yeah, they do options too here. They all are looking at open interest. And maybe Greeks. It's very weak analysis. The splitting between bull and bear position is the real basis of the technology. You'll see that, right? The idea that we can say this is where the bull zone is and where the bear zone is. And it's all derived from options. The entirety of it is. So we put up a ticker like QQQ. You can see that QQQ right now still has that same kind of look to it, but you see as the year goes by, it's not as drastic of a pivot as S&P is. It still comes down and bear side comes down. As you see, there's like almost two waves here. QQQ goes down, goes up, but then continues to come down, which shows the inflection point, or like the bearishness, is short-lived, which shows that QQQ is a stronger trade, and it has been. It's been the stronger index. And even forecasting months out, you can even see that when the S&P is in that shit market, as I drew that, QQQ stabilizes a little bit, becomes slightly more bullish and slightly less bearish. It indicates that the structure of Qs is a stronger index than the SPY. It means tech is going to do the heavy lifting still. This tells me all of that, like right on the surface, right? Don't give away too much. Oh, I won't. It would be impossible. I've heard people say, I'm gonna figure out what the rocket scooter did and release it for free and give it away. And like, you know, I always call them trading toddlers, like indicator people. They always have some kind of magic recipe of moving averages that, I promise this time it's gonna work, guys. I promise. Nobody's ever gonna figure out what we do. This is a non-linear equations that you can't even physically solve them. You can't. There's no analytical solution. You must start with the starting point that's within the boundary conditions of what makes this work, and then iterate to a solution. You can't. It's again, like, I don't know. There's not a lot of people with advanced math degrees that are selling trading technology. I'll just put it right there. It's a whole different league of understanding of how the mathematics works. The idea that we can create a bull and bear zone, the most important thing we've ever created for all of this to work, right here, this little button right there. The entire, the algorithm that sorts all the options that exist, eliminates the ones that don't matter, finds the options belonging to market maker, automatically finds the distribution of bull and bear positions. That auto button right there I circled. That's the sauce. So anyways. But it does tell a good story, right? QQQ is obviously weak here. But it actually gets stronger here. It's like you ever go to an art museum and you go see like that the painting that's like this, right? You go to the art museum, go to the wall, there's like the painting that's the white canvas, and you go, I can do that. What, that's art? And you're like, you could do that, but you didn't do it. They did it. And they did it first. It's different. For today, do I ever look at past intraday liquidity zones that may have been touched or fulfilled? I actually don't have a technique for that, but I wouldn't rule it out. As I said, like as we start to grow our process further, there are ways to explore and find other relationships, right? And we don't have a process for that. But it doesn't mean it's invalidated, right? Past liquidity pocket where bulls and bears are in harmony. The idea is the new day is the new spread. Options close, options stay. Like the next day is the real risk of all options that are still in existence. So past liquidity pockets, we never assumed to look at because we believed that the options would reflect in today. So it doesn't mean there's still pivots there, maybe, but if the option existed, it would make its way into here because the option, this daily mode looks at all options that exist. So yesterday's liquidity pocket, if those options closed, they wouldn't exist here. So like the new day is the new balance point. So we've never looked at the past to do that, but when we do have historic data drawn on the chart for everybody to use and analyze, it might be something worth looking at to see, you know, is there like an area of interest from past liquidity pockets? Maybe so. Is resilience busted today? It really is not. Like, it is what it is. It's still not showing a lot of good. And again, when markets are irrational, when you have those hedge pressure breaks, you see detachment. One of the rules in the qualifiers is we don't use resilience, right? But I wouldn't rule it out. You know, obviously there's millions. We're just breaking the surface of this type of analysis, right? Even my basic understanding of what we've made, like we've built something, and as the months and years go by, how to use the tool is we're uncovering so many different things that we didn't anticipate. Like, oh, this is consistent. Oh, that's consistent. Oh, this is the thing. The DD bands weren't something we just envisioned up. It was something that came from exploring other things, and we sort of fell into that answer. Originally I had a theory, and then we stumbled into something else, circled back on that theory, and then it's like, okay, this is worth chasing. The more we look at positional risk analysis, the more we find out that there's a million ways to get information just out of the stuff we've made, and more. And so the challenge is for you as a team to not just stop at what Matt's figured out. Like, I've created this machine that does something, and as time goes by, y'all figure out like, hey, have you seen this? Hey, did you know this? There's a bunch of project teams that we have that work on these things. They volunteer, and they do like theory crafting and data mining, and really try to put together the next set of tools from the information we have. So don't just say, just because I don't do it, it's not a thing. Like, the rules that we have, imagine in 2020, there were no irrational rules. There were no, and we didn't call it irrational. We still had like the risk interval rule, but it doesn't have a name to it. Like index divergence, 2 p.m. These are things we observe over the years, like new things, or we evolve to adapt to. The 2 p.m. evolved when the CBOE changed the options expiration schedules and added new options for the index products. So as time goes by, just imagine like you can come up with the next big thing at Rockets here. It'd be kind of cool. So if you find something that you find is like, don't stop exploring. It's like state of the art where we are now, as nobody is doing positional risk analysis to this degree. All the other folks out there that look at options heat maps, essentially what they look at, open interest heat map. They all stumble on the same solution. They're all good, they're all great, and they're all smart people. Nothing against them. TradyTix has it, I think. Spot Gamma has it. They all have similar stuff. It's options, and it's the same ballpark as us. But I like to say like it's cricket when we're baseball. It's a bunch of people. Like, the sports are similar. It's people on a field. Somebody throws a ball, someone hits a ball, people run, but the game is 100% different, right? So where we are in that kind of subset of folks is we're pushing the boundaries of that type of analysis beyond what anyone else has done. So we hope that other people step up and help us push further with what we do now as we keep creating new tools in this environment. So filtering out options and isolating what we believe are market maker options is something nobody claims to do except for us. That's what makes us immediately set apart. Oh, I gotta leave in 10 minutes. Okay. And so, as you say, what happens in past liquidity pockets? The answer is I don't know. And maybe it's worth exploring too, you know? Anything mean reversion, and actually this is a note for me in Slacks. Hold on. Yeah, I need to update the liquidity map stuff. All mean reversions are the same. The middle is random, and it's just liquid. So how the middle breaks is I use DD. Whether it's long up, it doesn't really matter. Middle is middle. They all act the same. There is no stronger mean reversion, weaker mean reversion. At least so far, we don't have them. We treat them all the same. So if you resist either wall and touch the middle, from that point it's random. And the only things that we use to break a random tide that's not irrational random from liquidity pocket is DD. DD will, if you were to force yourself to make a decision, you would assume higher before lower, as long as markets are rational, and that's it. L or S or up or down don't really apply in mean reversion, like to create an illiquid movement. Like in the mean reversion, middle reverting, liquid, not moving, all means the same thing, stable, right? The long and up, short, down, those have effects in illiquid moves, like one-sided moves, like trending days. Like the last two letters tend to help point a directional market to a direction, but a middle, like a balanced market, has no direction for the most part. I wouldn't say lower confidence. I'd say that a stable all green lights mean reversion trade with the positive VD is a very high probable move to the upside. It's a really higher confidence trade. It's just not confident that we break out and rally. And I'm pretty confident that we don't sell off and crash. How we move inside of here, it's really hard to say because a balanced market has no reason to move. That's the way I explain it. Do I normally call out trades on the stream? When I make trades, I always do trades. I just didn't make a trade today. I have to go in 3 minutes. Take my girlfriend to the doctor. So when I trade, I always make trades and talk about the trades I do. 100%. Yeah. I don't always make trades. I'm not a compulsive gambler. Show. All right, I gotta get out of here. We'll see y'all later. I gotta run to the doctor. Love y'all. We'll see y'all later today when I get back. Have a good one. You guys are tuning in. Gonna get out of here. We'll see you in a couple hours. No trades today. Nothing. Market's gone pretty much nowhere. And me too.